Welcome to Trading Lounge and the US indices. We'll look at the DJ, the S&P, and also Google as well. For this market here, it's reasonably clear that we've still got further to go in this market for the DJ. It doesn't have to work exactly the same as the S&P 500, but in its general trend it does, but on an intraday basis and in degrees of structure, then it can do its own thing. So in this case here, this trend here hasn't been corrected yet, so we can expect that. Yeah, once that occurs, then we can be looking at one more trend up. This trend up here should be roughly the same size as this trend moving up here in this one. So yeah, look, further to go in there. Also too with on the Nasdaq as well, with Google as well, is that I thought we may have had a high in here because this created a high here, but Google have got, or Alphabet have got a trading for, well, with IG anyway, A shares and C shares. So there's two markets in here. So this is the A share one where it touched on 1,000, where the C class shares didn't quite get to 1,000. But in both cases with A and C, they never never had a new high here. So it's only on the CFD that they had a new high on here, because in both other cases they were below there. So I think that this is still in a corrective mode here for this market, and can have another move to the upside here before pulling into this wave 4 here. So yeah, let's just see. But this structure down here, which I haven't examined, is not complete yet. And also too, it's possible that this could actually be wave 1 and wave 2 coming back, and then 3 and 4 and 5. So that doesn't rule out yet. I'll have to investigate this, but I know that because of this trend here, this next structure here is not completed. So with the S&P, I want to have a look at two sides here. This is one count that we've got here. This is our sort of now primary count of the market moving higher here. And one of the now that it's developing a little bit, we can start to see a bit of structure in here, and we're calling it in as a bit of a triangle pattern here. And one of the good things here is that this move from this high here down to here to here to here basically is in 3 waves. So technically it would need the market to move above this one here to prove that it is 3 waves. But yeah, also too in the cash market as well, it's this high here is the actual high here, and not this one here. So it can present a slightly different case as well. But I've always felt that you know, don't normally see a market fail before such a large number here. It's possible, but in this case here, we're still seeing like group 2 here, the 65, 72 and 80 is a group 2, and then the midpoint here still holding the market. It hasn't rejected this space yet. Do you know what I mean? So it's not there as a bearish situation at this stage here. Of course, if it moves out of this space here, then you know, we need to look bearish on that. And still, even trading this as well, a move under the 2470 as a retested resistance should attract your attention to the short side. Any triggers to the long side can be up here. You could probably get a better entry than this as well. It's just that any entry before that would be higher risk. That's all. On the sort of bearish side, which I still haven't totally sort of thrown into the you know, pull the plug on it yet, because there's still there as well. It's still there as well because as I was saying, this move up through here can still count as an ABC pattern here, as an A wave here and a B wave here. and then up for 1 here, back for 2 here, then 1, 2, 3, 4, 5 for here, then wave 4 from here. And remember, on the cash market, this is the actual high here. So I do have my A, my B, and my C wave in here that can make up the wave 2, and then I've moved down sharply, and then we've sort of rallied here. This does look a bit bullish corrective on the first sort of glance here, but that wouldn't be proven bullish unless this top here came out here, and that's why we'll look to go long on that note there. I'll just put that in green and get bigger so we can see it. So realistically, even though I've got this as the bearish count here, that would still be the trigger to the upside. And in this case here, now that we're more developed as well, we can look at taking that space out there. I probably mentioned that in here too at this stage. But we've moved further along, so let's see. If we get the break up on the Friday tonight, then we're going to see Monday be bullish as well. So you've got to be a little bit mindful of that. The other thing on the bearish side of things is just while we're here, is Goldman Sachs, and this is a daily chart for GS here. And the target area that I was looking for was down here with this at, yeah, so we haven't got there yet. But what I kind of like about this is that that this particular move up through here is in 3 waves, and then we've got this sort of nice 5-wave structure here coming down. So what would also make this bearish as well is that I'll just borrow this green line here. So taking the top, see, because this move up here so far, right, is got 1 and 2 and 3 here. So it can be an A and a B and a C wave to here, and that wave 2 here can go into place here. Okay, so, but that's not proven. We still may get, this is only 3 waves up, we still may get 5 waves up if we get the bounce straight off this, and then that would prove me wrong. But if this is going to move down even further here and overlap this top of wave 1 here, well then that's going to, you know, set it in as being an ABC correction, and we can start looking at being short in this in this particular market here. So a small position above, and then a position below on a retest of 220, and then looking to add into the 3rd wave. So all I'm pointing out here is that here is you know, a large US bank that has a possible bearish count in play here. So yeah, just need to keep an eye, you know, an eye on some of these things. Alrighty, cheers.